Hi everybody, Alex here from Expert Forex, and in today's video I'm going to be showing you the easiest simple forex trading technique that you can use. Now you're going to be very pleased about this technique because firstly it is totally automated, and secondly it is not complicated at all. Also, what I'm going to be doing for you is I'm going to show you how I activate the technique in less than 10 minutes during the video. All you have to do is copy the approach. Okay, let's have a look at what an easy forex trading technique is. It's one where you don't need much effort. Your time requirement would be very, very low. There's not much training required, so you don't have to spend much time on the training side, and it's a low stress trading technique. So it consumes a lot less of your resources. So let's have a look at the other side. Now, a typical forex trading technique needs high energy and high effort to understand and to get going. It is also very time consuming. And often a lot of training is required, which involves testing and experimenting with a particular system. Most forex trading systems can also lead to high stress. So that's the basic difference between a easy system and a difficult system. Okay, so now let's have a look at the requirements to trade a forex trading system successfully. Firstly, you need to find that perfect entry. Then you need to find the perfect exit. Now, my mentor always told me that you don't make the money on the entry, you make the money on the exit. And over the years, that has made more and more sense to me. And so few people pay attention to the exit. Then you have to manage your money during the trading process. And you also have to manage your risk during the trading process. And I'll talk a bit more about that. Then you also have to choose the right currency. Trading a great strategy using the wrong currency is almost useless. And then, of course, you've got to deal with the psychological issues such as greed and fear and many of those issues. So it's quite a landmine to try and get through a successful forex trading technique. And I'm going to go into that in a little bit more detail. So let's look at the entries first. You've got to find a reliable technique that gives you a high success rate on entries. They have to have good potential. It's no good getting an entry technique that only delivers 10 pips or 15 pips. In this particular market, you need one with good potential. You need to find the direction correctly, consistently over a long amount of time. And you need to be able to read the market conditions so that you use the right entry technique. Now, to develop these skills take a long time, and you have to test probably a number of techniques to find one that you are comfortable with. Okay, so let's move on to the next one, the exits. Now, finding an optimal exit is most probably more difficult than finding an optimal entry. Everything aligns at the time of the entry, but the exit can often be very much a hit and miss activity. So the exit is important because you need to maximize your income by exiting just at the right time. And the exit is also a way of managing risk, because sometimes you would exit negatively, but you also need to exit at exactly the correct place that ensures that you are not caught by a sudden trend against you. So stop placement is pretty important and difficult. It takes a very long time for people to get a feel of where they should be placing their stops, where they should be placing their targets, and how to enter. So this is all high investment, high energy kind of stuff, and high training stuff that people sometimes do courses after courses of courses to get more information about these matters. Then, of course, we have have our money management. Now, this is a dull topic that nobody pays attention to, but you need to manage your Forex trading in the context of the amount of money that you've got available. You should never risk excessive amounts of your money at any one time, because your long-term survival and your short-term control really depends on sound money management. Then risk management, which I've spoken a bit about earlier, is where do you place your stop for a positive entry, and where do you place it for a negative entry? That's risk controlling, because you don't want the price to run away and you being exposed to huge losses. So you need to control your losses using stops and targets. You also control your losses through lot sizing. So if you're using big lot sizing, your risks are big. If you're using small lot sizing, your risks are small. Or if you're using top-ups to top-up successful deals, your risk could be even smaller. All of this is starting to sound a bit complicated, isn't? But I'm just trying to show you the difficult part of Forex trading. Then the next thing is choosing the right currency. Now, the right currency is the one that matches the volatility of your particular technique. If you're trading a breakout technique, you want volatile currencies that will really move quickly in a certain direction. If you're trading bounce techniques, you maybe want a less volatile currency that bounces within channels or makes a lot of trend adjustments. You also need to choose a currency that is in a market phase suitable to your trading technique. No use choosing a currency that's trending like crazy if you're using a bounce technique, for instance. And also you must choose a currency that will give you more confidence in the direction of the trade. Often that confidence comes from fundamental information. Then lastly, as I've mentioned before, psychological elements that people don't actually pay attention to at all. But greed can ruin your Forex trading career within days. Fear can do the same thing. And supreme confidence can take you a long way in this industry. So here are all the things that you've got to perfect and align. They have to align. You've got to get the right currency, the right entry technique, the right exit technique, use the correct lot sizing and money management and all those kind of things. All those things have to align, and sometimes it takes years and years of experience not to even know when these factors are aligning. The market is a dynamic market and changes all the time. Okay, so that was just to give you a background to the difficulty of trading Forex trading and the elements that Forex traders have to focus on to succeed. Now we're going to move more closely to the technique that I'm going to be presenting in this video, and that is a grid trading technique. Now, what does a grid trading technique do? Basically, it splits the chart up into price levels that more or less are the same distance apart. Now, on your chart, you can see a chart like that, and let's say those lines, the red lines that you see, are 100 pips apart. So that represents the grid that we have now created over the trading chart. Now, by creating this grid over the chart, we have created reference points. So now what we do is we apply very simple rules. Now, there are two ways of trading grid strategies. There's the one where you only choose one direction, and there's the other way where you trade both a buy and a sell at the same time. Just to keep things simple, I'm going to show you the one direction technique first, and that will give you an idea of how grid trading works. Okay, let's start trading this grid, and I'll explain the trading rules as I go along. They are complicated if you've never seen them before, but first of all, you don't really need to understand the rules all that well, because the system will work itself. It's an automated system, but you need to get a grasp of what's going on. So let's start. In the beginning, we start, and I'm going to use this buy level here. We start and we enter a buy. Now, the rules of the system is that if the price goes up and touches another grid level, that buy will be positive. So what we do then is we cash in the positive leg, and we open another buy so that we can benefit from another upward movement. So that's what in fact happened, and the 1 there represents the buy, the cash in, and the other B there represents the extra buy. Then it goes up again, and again we cash in, so we've now had 2 cash ins and we've opened another buy. Then the price starts going down and we open another buy, because the buy in the previous level has been cashed in, so we need an opportunity to benefit from a buy movement. It goes up, touches the grid line, and we cash that buy in. But because there's already a buy open there, we don't open another buy. So the idea is to have buys on all the grid levels if you need them. Make sure that you benefit from any movement that goes in the buy direction. So we've cashed in that particular buy. We don't need to open another buy. So it goes down again, and as it touches the bottom grid line, we open another buy because that buy has been cashed in. So it moves up again, it touches the top level, and we cash in again. Now we've had 4 cash ins, and it goes down to the next level, and we enter another buy because we don't have a buy on that level. So the rules are very simple. Cash in the positive leg. Make sure that you've always got a transaction that will go positive if it goes in the direction that you want the trade to go. And that's all you do. And then it went down again, so you open another buy. It went down again, you open another buy. This time it went up and you cash in. And then it went up again and you cash that particular buy in. And then it went down, and then at that point you have to open another buy because there isn't an active buy at that level. It goes down again and you open another buy because that buy has been cashed in, and then it goes down and you touches the bottom grid level and you buy again. Then it goes up to the next one and you cash in, and now we're already at cash in number 7. And then you see the price shoots up even further and we cash in again at number 8. And then it goes up again and you cash in at number 9. And it goes up again and you cash in at number 10. So after this, you have 10 cash ins at 100 pips. That's 1,000 pips that you've made. The price has in fact only moved 2 grid levels, which is only 100 pips. So you have taken a trend that has moved 100 pips in your favor, and you have turned it into a $1,000 gain. Now that is what we call the multiplier effect, and why that had happened is the price has revisited the same price level over and over again, and we've cashed in, and that's the multiplier effect. Now at that point, at where 10 is, there are no open buys except the one that you're about to open there to keep the process going. So at that point, that is a pure profit, and you can then move on from there. But that explains the trading methodology. The rules are very simple. Make sure that you can benefit from any price movement from one grid to the other. So you need to be able to have a transaction in place that you can cash in if it moves from one transaction to the other. That's the basic rule. And you need to cash in the positive deals consistently as they hit the grid systems. Now, don't worry if you're a bit confused. I've been doing this for 10 years, so it's pretty easy for me. I've made a lot of videos that you can look at if you need more clarification on that. But as I say, at this point, you don't need 100% clarification to move on. Okay, so here are a few videos that you can look at for more information on grid trading. It is in YouTube in one of my playlists. There's the actual address. You'll actually see a link on your top right hand side flickering right now if you want to go to this particular playlist. But there are already 13 videos, and this will be the 14th one that we've made in 2019 about the grid trend multiplier. So you've got lots of information if you like that. And another easy way of finding this is all you do is you go to YouTube, search on Expert Forex, and when your search comes up, you click on the globe with all the flags, click on that, and you'll get to my YouTube channel main page, which lists all the videos that I've made. there are over 700 that you can look at. There are also almost 70 playlists that you can look at. So this is a good control point to work from if you want to find videos that I have made. You can see I've already got 23,000 subscribers following me over the last few years. Now I'm going to show you some current results that we've had from trading the grid trend multiplier. We currently have a setup club where we have traders participating and putting in their trades and showing how they're trading, and we're discussing all the trading there, and a part of that is obviously trading the grid trend multiplier. So we have a lot of techniques being traded at the same time in this particular club. Okay, and in this technique uses the Euro USD. It uses a 15 pip grid. So those grid lines I showed you earlier are 15 pips apart, and it trades lots of 0.04, and it started with a $10,000 account. Now, why I'm telling you that is those are the only settings that you need to worry about when you trade this technique. You only need to decide on the grid size, the lot size, and the currency that you're trading. That's why I'm saying this is one of the simplest techniques you can ever come across. And what's more, there's a lot of guidance within the forums to help you with those processes in your decision making. So there's only 3 things you need to decide all the time. So this person traded the Euro USD. They've got about a $2,200 gain, 100% success rate, and they've made 800 pips, although the euro has only moved about 150 pips. So they have done pretty well in this particular process. And this is only a 15-day result. So this trader is pretty happy. So he's trading a strategy that could be aggressive if the market starts trending, but is quite an effective strategy. So let's have a look at another one so that you can start getting a feel of the main settings that you should apply. Okay, here's another example. This is the Euro franc. It's being traded on a 9 pip gap, which is a very, very small gap, and it's been traded at very high lots, 1.5 lots per trade on a 5k account. Now this is really quite aggressive, and you can see the results that this account has achieved are also quite good, in that in a short period of 9 days trading, it has amassed a profit of over $2,000. So pretty good. So let's have a look at a sort of a more middle of the road strategy. So this is the final strategy we're going to have a look at. Here's another Euro franc trade. It's on 8 pips, but this time the lot sizing is a lot smaller than the previous example that we've shown, and they started trading. This is also a 9-day period, so they started trading at the same time. This one has only made a 50 pip gain over that period, because of the lot sizing being 0.02. So obviously the lot sizing for the Euro franc should be somewhere between 0.02 and 1.5 to be, let's say, a good balance between profitability and safety, or profitability and risk. But those are the kind of things that we look at in the forum, and that you can also experiment with. Again, the main principle is all you need to do is select the right currency, select the right gap, and select the right lot sizing, and that's all you need to do to trade this particular technique. Quite exciting because it's so simple. So in the next 10 minutes, I'm going to show you how to actively start trading the GTM EA using the guidance that I'm going to be providing. Okay, so the first thing is to open a demo account of $5,000 and activate the GMT. So in other words, you need to buy the GMT and activate a demo account. Now, so what I have done, I have opened a demo account. There it is on the screen there. I have uploaded the EA and installed the EA on a chart of the Euro franc. So that's normally a very quick process. So the next thing to do is decide on a currency to trade. Now, one thing I didn't mention sufficiently is that although I illustrated the grid trading technique using only a buy direction, the technique can very effectively be traded trading both directions at the same time. So what you do is you enter a buy and a sell at the same time, and you just apply the same rules as I detailed there. You cash in the positive and you open another one to make sure that you can take advantage of any movement in the market, whether it's going in a buy direction or a sell direction. So you just apply the same rules and it will work quite nicely because of the multiplier effect, where the price visits the same price level over and over again. So in this strategy, and in all three the strategies that I showed you previously, the traders have opened buy and sell transactions at the same time, and it will make a bit more sense when we look at the setting. Now, when you're trading a buy and a sell at the same time, you want to find currencies that have low volatility. In other words, they don't move much, they just doodle around sideways all day long. So now I'm going to quickly show you how to find that, and to do that we go to a site called MATF, and we go and find the volatility pages on MATF. Okay, and here we are on the MATF website on the volatility page, and here you can see they measure the volatility over a 10-week period, and they've got a lot of currencies that they're doing that to on a continuous basis. Now it's weekend now, so the figures won't move, but they can move from time to time. So here we have, and I'll just move it down a little bit, here we have a list of currencies, and there's a list most probably of about 70 or so different currencies there, and they are listed, and you can sort this list as you like. So what's in this pip column is the daily volatility of the particular currency. So we're looking for low volatility currencies, so we sort it, and there we find a whole lot of low volatility currencies, but none of them are actually very traded that often. So we have to go down the list and find, and here we are. The euro franc is the first, let's say, normal traded currency that we find, and that is why I've selected the euro franc. It is a low volatility currency and doesn't move that much. It only moves 40 pips, 46 pips a day. Then if we move lower, we'll bump into more. There's the franc itself at 53 pips, and then the New Zealand franc at 57, and so on. So we're looking for low volatility currencies, and this is the way you find low volatility currencies. You go to MATF, sort the volatility column, and then you find a list of low volatility currency. The currency sorted out, and you can see why I went for the euro franc. It's the lowest volatility currency. I'm hoping you see how easy this trading technique is. So we've opened our account, we've loaded the GTM onto the euro franc chart, and now we're going to go to the settings. C says set the account target to 10% of your account, which is $500, and then set a buy and a sell using a 10 pip grid. So the grid sizes will be 10 pips and a 0.04 lot size. So let me show you how we do that. So here's the input for the EA. It looks like a long list, but if you follow me, it will actually be very easy. So it says here, what is your target in dollars? I say $500. Then it says, what is your loss? So effectively, that's your stop loss for the group of trades that you're going to be making, and I'm also putting in 500 there. So it's as easy as that. Then I go down the settings, and the next one is how do you want to do your lot sizing? There are a few options. I always stick to manual lot sizing, so make sure you manually lot set, and then we go to the buy settings. So the buy settings, as we've agreed, the grid size will be 10 and the lot sizing will be 0.04. As simple as that. So I put 04 and 10 in there. Don't worry about the other settings. Then I come to the sell settings. Now we've got a setting that says just copy the buy settings. You don't have to worry, just copy, and that's what I've got it set on. You can see there, copy the buy buy settings into the sell settings, and then once you've got that, I've entered 0.04 and a 10 just to make sure, but you don't have to worry. The EA will know that once you've set the buy equal to the sell, it will apply that. And then the only last setting that I'm going to worry about is the re-entry disabled. In other words, if the EA hits the stop or the target, I want it to stop because I want to reevaluate my trading strategy. Even if it's successful, I want to reevaluate it. So that is how simple this EA is. And in fact, you can just copy these settings and this approach right now, and you'll do pretty well. After doing these settings, we just click on OK, and the EA is ready to trade. Now it's weekend now, so that's why it hasn't started trading. If it was active at the moment, it would immediately open a buy and a sell at the same time and create the grid that we were talking about earlier. All right, so now we're on to E. So what we do now is we set and forget. We just let the EA run. And we have a look at it every day or so, but it will open buys and sells, and it'll cash in a lot of things. And sometimes the equity will go negative and sometimes it will go positive. Just sit back and relax and let the EA run and let the multiplier effect happen. The multiplier effect needs a bit of time for the price to revisit the same price level over and over again and cash in over again. So the idea of this EA is not to trade 4 hours and cash your trade in. It is more one of trading 4 weeks or even longer. So the next step is that the EA's target and stop will be hit, either the stop or the target. Over time, that's what will happen. And if it's positive, that's great. If it's negative, that's just too bad. But you then need to look at only three actions. And that's why this technique is so simple. All you need to look at is say, did I trade the right currency? If not, change the currency or keep the currency and change a few other things. Did I trade the right grid size? Now, if you've made a loss, the chances are that your grid size was too small, because how grid sizes work, the smaller the grid size, the greater the risk. The bigger the grid size, the smaller the risk. So if you've made a loss, just increase the grid size, as simple as that. Then you look at the next item, which is the lot sizing. If you've made a loss, your lot sizing is likely to have been too high. Again, with lot sizing, the higher your lot sizing, the higher your risk. With the lower the lot sizing, the lower your risk. So it's a very simple concept. So if you've made a loss, lower your lot sizing. So let's say you've made a loss, you increase your grid size and you lower your loss. If you've made a profit, you must probably keep it the same. If you want to become more aggressive, then you make the grid size a little bit smaller, or the lot size a little bit bigger. So it's very, very easy to decide what changes you need to make for your EA. Again, falling into the category where this is one of the easiest EAs that you could possibly trade. You don't even have to worry about entries and things like that. Okay, so then you just repeat the process over and over again. And when you're supremely confident about your trading, then you can start trading live, or you could even consider trading in one direction only. Okay, so remember this slide. Let's go back to the 5 items that we've mentioned on this slide and have a look, evaluate this trading method I've just shown you according to those 5 items. Firstly, the entries. Now, with a conventional trading technique, there's a considerable effort to get the best entry. With this technique, you don't have to think about the entries. It is done at each grid level automatically. You don't have to worry about entries anymore. Then the exits. The same thing applies. The exit, as I said, as the price touches the grid level, it will close the deal and open another deal. So your entries and exits are catered for. How relaxing and easy is that? So let's look at the money management. Money management is easy as long as you don't risk more than 10% of your capital on any group of trades. You're okay. As you've seen in the settings, we loaded 10% in as a dollar risk amount that we're going to be risking. And if the price runs mad and suddenly starts trending 500 pips in one direction, you will not lose more than 10%. So there is your money management sorted out. Then your risk management. As I said earlier, the whole trading technique only needs a decision on two things. What grid size am I going to use, and what lot sizing am I going to use? So in this video alone, I have shown you 4 combinations of grid size to lot size that have been successful. So you're not guessing, you're actually following success as you're making these decisions. If you have a failure, you use that failure to adjust those levels, as I mentioned earlier. So it is very, very easy. The only thing you need to focus on is grid size and lot size on a continuous basis. How easy is that? And then currency selection is again an important aspect of normal trading, but here it's so easy. You just select the least volatile currencies for your sideways techniques, in other words, your buy and sell techniques. When you get to a more advanced stage, you might want to use volatile currencies for your one-directional approaches. But remember, this technique makes its money from the multiplier, so that we want the price to dawdle around and go nowhere in particular and visit the same price level over and over again. So the one directional technique is good in that you'll most probably catch the right direction, but the multiplier won't work all that well. And then lastly, the psychological issues. Can you see how the psychological issues do not play a major role in this trading technique at all? You're not stressed by finding the right entry, the right exit, the management technique, the money management that you should use, the lot sizing and things like that. So you are not stressed. This is a very, very low energy, low stress trading technique. It's ideal for beginners or people that work all day long and don't have time to worry about trading. Okay, so let's have a look at the Grid Trend Multiplier marketing page. And the good news is that YouTube subscribers, you have to subscribe to my channel, get a 50% discount when purchasing the Grid Trend Multiplier. And I'm just going to scroll down the marketing page. I've already discussed most of the things that are in this particular page. We recently ran a competition that ended on the 26th of January, and the Grid Trend Multiplier was our best EA out of the 14 EAs that we have. And you can see here that the production was pretty high. People made over 300% returns on their grid trading. So when you go to this particular page, you will not see the normal price of 280. You'll see a price of 140, which you can just click on the PayPal button to take advantage of. Also, at the time of making this video, we are currently running a promotion where we are giving 80% off all our EAs. So if you want to get more information about that, click on the button on this particular website. Now, around about now, you will see a link appearing to go to the Grid Trend Multiplier website, where you can view this marketing page in a lot more detail in your own time. Now, if we go back to the very first page we started on, you'll see that that is why we're making this claim that it is the easy Forex trading system that you can ever find. All you have to do is do currency selection, which is pretty straightforward. You need to decide on a grid size. You've got a lot of examples to go by from that, even in this particular video. And you have to decide on lot sizing. And again, there are a lot of examples even in this particular video. So this is truly a simple technique. 3 decisions that need to be made, and it's totally set and forget. Now, please take advantage of the special YouTube discount being offered, and also that 80% discount on all of our EAs that is running right at the moment. So from me, Alex Deploy, I hope I've given you something to think about. This could be a life-changing Forex trading technique for you to learn. So I would sincerely urge you to learn more about the Grid Trend Multiplying technique. Cheerio. Thanks for watching this video. If you've liked it, please give it a like. If you haven't subscribed yet, subscribe and click the bell. But most importantly, share this video. You can do this in many ways. Message your friends, send them emails, or share it on social media, on Facebook, on Twitter, and those kind of places. So from me, Alex Aploy, cheerio.